Welcome back to ICT Trading Concept. How are you all? I'm almost fine, okay? So, if anybody is here, please let me know that you can hear me. The voice is clean. Important to know. So, after that, I will start. Before that, I have to know that you can hear me. If anyone is here, Suhash Koda. Okay, let's go. I'll go. But before that, please let me know that you can hear me. I mean, you can hear me. Voice is okay. Just let me know that. Net little slow. So, can you hear me? Can you hear me? Hello, hello, hello. Micro testing. 1, 2, 3, 4, 5. Hey, George. Can you hear me, George? We can hear you. Okay. Thank you. The internet is little slow actually. It should be 6000 something, but it's 2628 kilobyte. So maybe it will be little disaster today. Okay, let's try. Thanks for confirming that. Weekly analysis. Okay. Before that, many people will come to this trading journey. They will come, they will try, they will gamble, they will start live trading before they should start, and then they will just go away. Okay, they will be lost. This is the secret of this journey. Those who will stay after getting lost, after blue so many accounts, who will be stay here to this industry, they'll be they'll be the success people. Okay, at the end of the day, they will earn money from here. That's for sure. If you don't stay here, if you just come here and you think, okay, this is a most liquidate market. So hey Ravi, how are you, brother? I have just started. Like, you just come, you thought, okay, let's try trading. If it works, then good. If it doesn't work, I will try after that. If you think like that way and you start trading, leave it right now. Okay, don't spend your time, don't waste your time over here. You have to stay here until the success will come. At the end of the day, the success will knock on your door. That's for sure. I can guarantee you, man. Hey Joy, how are you, brother? Actually, why I told that, I saw some people, they were very curious, they were very interested about trading. After that, some days they spent some times and then they just lost. Okay, so I thought it should talk to you, and I can see little people. I thought, let's talk about this first. Whatever. You can see the calendar for coming week. Sunday 7 p.m. we have Fed Chair Powell speak. Monday 10 a.m. we have PMI. Tuesday we have medium impact news. Wednesday also medium impact news. Thursday 8:30 we have unemployment claims. Friday we have no medium or high impact news. Friday, okay. So please be careful about the forex calendar. This is this should be your first job at the weekend. At the weekend, you have to first open your calendar. You have to see, okay, I'm not just telling you that please go to forexfactory.com. Just go to any calendar, okay, you love. Just go over there and check the calendar first. Then you will understand when you will get the volatility. Usually in Monday, we don't get any volatility. But as we have the news in Monday, 10 a.m., I guess we are going to get some volatility from Monday, okay? It's not gonna be a slow market in Monday. I have no narrative for this week. No narrative, because Monday, I mean, just look at the news, okay? Because of this news, I'm going to hold no narrative for this week. Chair Powell speaks Sunday, okay? Whatever. Let's go to dollar index. You are here to do the weekly analysis. What are you talking about, brother? Yeah, I know. So this is dollar index, and today is the first weekend from February. Okay, so every month, first weekend, you will go to the monthly chart. You will go to your monthly chart, then weekly, then daily, then lower time frame. Okay, I'm gonna start from 3 month chart. This is 3 month chart. If you use your trading view for your weekly analysis, go to your trading view, just write 3M. Okay, enter. You will get this chart. This 3 month chart from dollar index. What do you see actually? Price went higher. Okay, this is all time high for dollar index. Then price broke lower. It has made relatively equal lows. Market has taken the lows. It went higher. Okay, it tried to go high, failed to go higher. Traded some parallel gap around that area, or breaker, maybe water block, anything. I don't know what it has traded over there. I don't need to know. It happened in so long. I mean, I don't need to know what happened over there. Then price went lower one more time. It has made again relatively equal lows. Take the lows, went higher. Came to this last parallel gap. Look at this parallel gap. This candle high, this candle low. This is the last parallel gap from that leg. Very recent leg. Okay. Price came here. This is the reaction. Price came here to this parallel gap. We are right now here from 3 month chart. Why it is important? Because you will get an overall idea where the dollar index is going. Okay, I'm gonna give you some information today. What is really so important if you trade forex or indices? It will really help you so much. Okay, just stay tuned. It has traded this last parallel gap, then it came lower. It has traded that parallel gap. I'm expecting it will go higher. Okay, from 3 month chart, I would love to see some kind of higher up. Why? If you see, when it has taken this liquidity, this is a very nice displacement. Price come here to this parallel gap. Why this parallel gap is important? This is the breakaway gap. This is the entry gap. This is 3 month chart, guys. So price came to the entry gap, went higher. It again went higher. Now, if you just look this small portion of the price from here to here, okay, this portion, you can see market has taken some liquidity around that area. Then I got very nice market structure shift around that area. Two parallel gap. Okay, this is the first parallel gap or the breakaway gap. This is the entry gap. At the same time, this low failed to take that low. That is kind of sign market will have to go higher. When it started to go high, it failed to take that high. That means it was trying to go there to take that high, but it failed. It went lower. Where? To this parallel gap. This is the entry gap. It should go high. That is my expectation. Now, how do you know market is going higher or lower? Nobody knows, guys. Nobody. Simply nobody can tell you where market is going. You have to take your decision depending on your price. How do I know market is going lower? Look at this parallel gap. See this candle high, that candle low. It is now trading around that area and it is just showing you the sign I would love to go higher. That is why I'm expecting higher. Now, if I see it's broken, it started to go lower. How do I know it's going lower? Very nice displacement to the lower side. See this low? This low is a swing low which has traded this parallel gap. If I get a very nice big displacement to the lower part, I will mark that as a market structure shift and I will start to think market is going lower to take that lows, that low and that low. They are relatively equal lows. Now from 3 month chart, this is not relatively equal lows. There is a huge difference. I mean distance between that two lows. Right now I'm thinking it has traded this rejection block and now it is going higher. That is the thinking right now for me. I will change my direction if I see market is actually going lower instead of going higher. When I will go to the lower time frame, you will understand whatever I am telling you here, you will understand everything. Right now, I would love to see it will take that high and that high. See those highs, it will go above those highs. That is my expectation from here, from this chart. Why 3 month is important? I have just shown you full price action. Market has taken this lows, then it has taken these lows, it has taken that lows. It has just taken the lows. It didn't take the high. Okay, this is the first time after this big run. It has taken little buy side liquidity, but it left this huge swing high. So many people sold around that area. So this is a very nice liquidity level. My expectation is market will take that high. After that, I will see what happens. Now I'm going to monthly chart. 1M is the monthly chart. Okay, so you can see price came here. So this is the dollar index right now. What do you see? Okay, don't think this is monthly chart. Just think this is 1 minute chart. Just feel that this is 1 minute chart. What do you see from this chart? We remove this one and that one. Don't think this is monthly chart. Price is fractal. So every time frame will give you the precision from 1 minute to 1 year chart. Okay. Why 3 months and not 4 months? Suhash, actually, I have no idea why not 4 months. ICT told to look the price from 3 months. Okay, so I actually get the precision from 3 months. I use 3 months. But if you ask me why not 4 months or 5 months, 6 months, I have no idea. I can't give you the answer. Okay, because I have no way to ask ICT why 3 months, why not 4 months. So he told 3 months. I use 3 months. You can say I'm a blind follower of ICT. Okay, because that guy has more than 30 years experience, and I guess whatever he tells there is a logic, but I really don't know, man. I'm sorry, man. Hey Thaps, how are you, brother? Now, if you think this is 1 minute chart, what do you see from this 1 minute chart? Price came here, it went higher, now it came lower, it is consolidating. What should be your expectation from there? Market traded that area, market structure shift, price came to this fair value gap, should go higher. When it started to go high, there is another fair value gap. Price is range bound. Okay, range bound. There is a fair value gap. There is a fair value gap. See this monthly fair value gap. This monthly fair value gap. Price is range bound. It is going higher. It is going lower. It is just doing the consolidation around that area from monthly chart. If you see closely, when it has traded this monthly fair value gap, lower part, then this week consequent encroachment. Why it is important? We see the week as a fair value gap, and the consequent encroachment of that fair value gap is very important. This is discount consequent encroachment, weak consequent encroachment. Price traded that consequent encroachment, it went higher. At the same time, if you see closely the bodies, where the bodies closed above the monthly fair value gap, lower monthly fair value gap, see no body closed below the monthly fair value gap or inside the monthly fair value gap. But if you look here, it went inside this upper monthly fair value gap. Okay, tried one more time to break lower, failed. Use this monthly fair value gap high as a support. It is now going higher. When it is going higher, if you remember, I was thinking that market will take that buy side liquidity from 3 month chart. Okay, but how do I know market is going to take that on? This fair value gap. See this candle high, that candle low. This is the inversion fair value gap. If you see, there is a fair value gap as well. That candle, there is a fair value gap as well. But I don't. I am not actually interested to mark that fair value gap. Instead of that, I would love to mark the inversion fair value gap. According to my experience, this inversion fair value gap is much more important comparing with this fair value gap. That's why I have marked that inversion fair value gap. Now, if you are confused about the inversion fair value gap, obviously you can mark this fair value gap. Okay, this candle low and that candle high, there is a fair value gap. You can mark that on if you are confused about the inversion fair value gap. Also volume imbalance in 1 month got respected. Bearish volume balance. Volume balance between November and December candle. This one, I guess you are talking about that one. I will talk about this when I will be in weekly chart, okay? Because in weekly chart there was my water block and the mean threshold, so I will talk about that over there. But yeah, obviously that is also a confluences. You can use this volume balance as your direction, or you can see it perfectly respected the volume balance. But I will talk about this from weekly chart, okay? Just don't give me the direction, otherwise I'll be in a problem because I'm really so busy and I have so many things in my head. I'm in a lot of tension, okay? So don't give me the direction, otherwise I'll be in a problem. Okay, I can't explain whatever I want to explain today. So price is right now over here. I will I want to say market will come here to this monthly inversion fair value gap this week. This week price will reach that monthly fair value gap. From monthly chart, that is most important for me. When I will think that market is going to take that high. If I see this monthly inversion fair value gap failed, okay, it failed to hold the price. The body close above the monthly fair value gap, and that is not fake breakout. Then I will start to think market is coming towards that high. When it will come here, then the consequent encroachment of this monthly fair value gap, the monthly fair value gap high, every level is important for me. Right now, I'm thinking about only this monthly inversion fair value gap. How do I know market will go lower? If I see this monthly fair value gap is actually holding the price, okay, it's not showing any sign that price doesn't want to go higher, it would love to go lower, and that's why market start to respect this fair value gap. See the how this is the respect, okay? Price came to this fair value gap, boom. Came to this fair value gap, boom. This is the respect. If I see this type of respect to this monthly inversion fair value gap, I will start to think, okay, maybe market is not interested to take that high. Instead of that, it will go lower. So I don't want to see that. I would love to see market will go higher and it will take at least that buy side liquidity. Okay, you can ask me, brother, why this small range? No, it's a huge range. Okay, it's a very big range. You don't need even it is going to take that high. You doesn't need it. You don't need it for this week. For this week, I just need this run from here to this monthly inversion fair value gap. If I see that happened, the week is already done. Okay, I want to say market will come here to this inversion fair value gap for this week. Next week, I will see how it reacts. Now I'm going to weekly chart. Uh, okay, thank you for your time, bro. Most welcome, Ed L. You are most welcome, man. Actually, my sister's marriage ceremony, 1st of March, and I'm his elder brother. So a lot of responsibilities. Right now, I have no time for anything. But I thought I should come here for this weekly analysis. And now, guys, actually, whatever I'm telling you here, don't take it seriously because there is some other YouTuber as well. They will discuss the price as well, like last week and the before last week. They were expecting lower run. I was the only one, and I was thinking I was started to to confused myself myself that am I right or am I wrong? Okay, I was little confused because every single person was expecting lower run. I was expecting higher run for the dollar index. So all of them were actually expecting that the volume balance from the monthly chart price will trade over there and then it will expand lower. But I'm the one who actually thinking that it will reach to this weekly fair value gap or the monthly inversion fair value gap. Okay, now I'm going to move it from here because I have the weekly fair value gap aligned with the monthly inversion fair value gap. So I guess it is enough. Okay, yeah. So you can see the fair value gap. Okay, now from 3 months, don't forget anything. Okay, from 3 months until here, you see prices made relatively equal lows. This low and that low, they are relatively equal lows. What happened? Price went lower, has taken this liquidity. Now, is this shallow run? No, this is not shallow run. Why this not shallow run? Because body closed below the liquidity. It has taken all the liquidity. There is no liquidity left around that area. Then very nice displacement. Look at the run. Very nice displacement. Huh? It went here to the inversion fair value gap from the weekly chart. Here came here. It went lower. It started to go low. Where did it came? To the weekly fair value gap. What is this? This is the last fair value gap. It came here. Look at the bodies. How beautifully it has respected this weekly fair value gap. I don't care about the week. I told you that. I don't care about it. I care about the body. This weekly fair value gap hold the price. Even the consequent encroachment of the weekly fair value gap hold the price. Okay. Now price started to go higher. When it started to go higher, there was a fair value gap here. There was a fair value gap here. So I have two fair value gaps. Above me, this is the weekly fair value gap. Below me, this is another weekly fair value gap. So these two fair value gap. Okay, price is now into these two fair value gap. This is the last fair value gap. This is the last fair value gap from this small price action. Okay, this is the order block. This is the mean threshold. I told you, if I see market close above the mean threshold, that means this order block failed to hold the price. If it failed to hold the price, this buy side liquidity is more obvious. What do I have above that buy side liquidity? I have this weekly fair value gap. Now, when this kept open, what does it mean? That means this is the breakaway gap. Okay. If market is ever extremely bullish, in that case, extremely bullish. Okay. In that case, market actually left some fair value gap open like that way. If it is extremely bullish, then so when I see it actually didn't trade here, in my opinion, market is extremely bullish. I would love to see big run or the upper run, okay, not the lower run, not nothing like that. I want to see it will just expand higher. That is the thing I want to see. At the same time, this is the inversion fair value gap. See this line and that line. This candle low, that candle high. When price came here to this weekly fair value gap, it broke lower. What should price do? Price should come here to this fair value gap. It should expand lower. When it failed, hold the price. Instead of that, market went above this fair value gap. Come back again. The bearish fair value gap turns into the bullish fair value gap. That's why it is the inversion fair value gap. At the same time, when it went lower, this low failed to take that low. I got the confirmation this could be the best inversion fair value gap. Market came here to this inversion fair value gap, tried to go higher, failed. This last week, price one more time tap to this inversion fair value gap. Now price is right here. I would love to say market will go higher until this weekly fair value gap. When it will reach here, this is the last fair value gap. If it fail to hold the price, I would love to see that buy side will be taken. Now I'm not telling you that market is going to do that this week. It is going to take that buy sell liquidity by this week. No, I'm not telling you that. That is my bias for dollar index now. How do I know that market will go lower? When I will be sure that no, market is not going higher, it is actually going lower. This inversion fair value gap, see this and that. I don't know you can see it or not. Okay, this gap. If I see body close from the weekly chart, body close below this fair value gap, then I will start to think, okay, market doesn't want to go higher, love to go lower first. Maybe later, some days it will go higher. Right now, I would love to see market will come here to this weekly fair value gap. Is that enough? That is a very small range, right? Is that enough for our trading? Obviously, man, it's enough because when price will, if price come here to this weekly fair value gap, trust me, you will get at least 2 days. Very nice trade, okay? Very nice trade. I'm going to daily chart now. So here is my daily chart and you can see the volume balance here. This is the volume balance. So price came lower, lower, then it went higher. Okay, when price did this, I have this sell side liquidity, that low and that low, they're relatively equal lows. That was my target when price was around that area. I was telling you that if this low, okay, see this candle, big candle, if this low is broken, this sell side liquidity will be my target. What do I mean by broken? Body close below that low, then this sell side liquidity will be my target. But price never go below that low. Instead of that, it went higher. Then I got this volume balance. I was the last week actually I was thinking market will trade that volume balance, but you can see it actually failed that volume balance for a little, okay, for very little run it failed. Instead of that, it trade until that, then it went higher. Now I was expecting price will come here, it didn't reach here. That means I'm wrong? No, I'm not wrong, because that was my expectation, that market closed there. See this candle, market closed there, it will go lower. That was my expectation. When it started to go low, I will find a setup, and that's enough for me. I don't need to trade that volume balance. This volume balance, very nicely market came to that volume balance one more time, to the top of the volume balance, boom. Anybody has any confusion about that run? See this consolidation, boom, consolidation, boom. What should your expectation right now? Consolidation or the continuation? I don't need I don't need to know that it is going to consolidate or not. But I am sure that market is actually taking that buy side liquidity. Why that buy side liquidity? See those highs, very clean. The market should trade that buy side liquidity. There is nothing that can hold the price. No fair value gap, nothing at all that can hold the price to take that buy side liquidity. So that is more obvious. Now, it is directly going to take that buy side liquidity. I am not telling that. I'm just expecting market is going to take that buy side liquidity. If I say market is actually going lower, I have two level. Okay, I actually go for this water block opening of the candle. That is my favorite water block level. But actually, water block is start from here to here. This is the water block level. Okay, then the mean threshold. This is the three level from a water block. Now market can tap to the high of this candle, then it can expand higher, or it can retrace until this opening. It can do that, or it can stay between these two levels, the constant encroachment. It can trade that area as well, then it can expand higher. Okay, so be careful. If you see it started to go low, just don't think okay market is actually going lower. That is my expectation. I am not going to think like that way. If I say market is going lower, I will just observe this two level. Okay, from here to here, is it actually coming here to trade that water block level, or it is going through that level? I will just observe the price. My expectation is market will take that buy side liquidity. If I see market start to go lower, what will I do? I will jump to the trade? No, I won't do that, because that is against my expectation. What you have to do, you have to expect something from the market first. If you have no expectation from the market, you have no trade. If you don't expect something from the market, you are actually doing gambling. Market is going lower, so you are chasing the price. That's not good, that's not right. Okay, so first you have to expect something from the market. How do you expect? Like the way I'm expecting, seeing the price, how it respect every level from 3 month, monthly, weekly, now in daily chart. I'm just watching the levels with very simple concept, very simple thing, fair value gap concept. How the fair value gap is trading. This last weekly fair value gap holding the price, market went higher, it came back again to this volume balance. Okay, nice. Top tap to the top of this volume balance, boom. Now if it started to go low, I will just observe this two level, how it trade those levels and the constant encroachment of that week, because this is the mean, I mean 50% of this two water block level. If it come here, then give me a setup for buy. I will just take that on. Now I don't trade dollar index, I trade NASDAQ. When it will go higher, I will expect NASDAQ will go lower. Until here, just I need to stop. Okay, now I would love to tell you something that is very important. If you guys trade Forex, I mean, I don't know who trade Forex and who trade future market or the indices. If you trade Forex, if dollar would love to go higher, there is 99% of the chance Forex pair, okay? I mean the pair, you will have the USD at the last, like Euro USD, Aussie USD, GBP USD, okay, where the USD at the last, they will fall 99% of the time. If you say dollar is going to fall, they will go up. This happens Forex, and that is very high, highly related, okay? I mean dollar index and the Forex pair, they are highly related. Now, if you trade indices, you have to understand that from indices, we need just an idea where market is going. It is going higher or lower. The dollar index, is it going higher or lower? We are not going to 1 minute chart. Then we will look for a buy setup from dollar index. At the same time, we will look for the sell setup for the indices. No, we are not going to do that. Why? Because dollar index is not highly related with the indices market. Okay, if you trade Forex, just go to 1 minute chart, look for a setup from Forex, I mean dollar index. If you see, get a very nice buy setup from dollar index, at the same time you get a sell setup maybe in GBP USD or maybe in Euro USD, just go for that trade. Just go for that. There is 99% possibility that will work, okay, if you trade Forex. But if you trade indices, it's not going to help you because dollar index is not highly related with indices market. Then why do we need that? We just need an idea, okay, this kind of barometer for indices or future traders. That means from high time frame, I mean high time frame means I love to go for 15 or 1 hour chart. That's enough for me. I don't need to go above market or below market. 15-minute chart and a 1 hour chart is perfectly okay for me. So I try to get an idea from those time frame. Is dollar would love to go higher or lower? If I see it wants to go higher, okay. At the same time, if I see indices market is also going higher, there is the setup, it is going higher, then I expect it will be high resistance liquidity run. That means indices will take that buy side liquidity, but very hard way, okay, manipulation or choppiness, maybe seek and destroy mode. I expect that type of things. If I see both of them are giving me the same direction, dollar index and NASDAQ, the best option is don't trade around that area. If you see last day it was high and the what to say the NQ was also high, okay, you will see sloppiness, okay, seek destroy mode, something like that, very high resistance liquidity run, something like that. That's why I get an idea when I take an entry. I would love to see some kind of very immediate reaction. If I don't get it, when I expect that I'm not going to get the very high, I mean very precise price action. If I see dollar index is going higher, NQ is also going higher, in that moment I don't expect immediate run or immediate reaction from NASDAQ. If I see dollar index is actually going lower, at the same time NASDAQ is going higher, then I expect the immediate reaction. Okay, that's why you can't think that market is going higher, the dollar index market is going higher, that means NASDAQ will go low. No, dollar index is going higher, indices market can go high. Okay, even S&P or Dow or NASDAQ, they can go higher at the same time. There is nothing wrong with that. But if they're at the same direction, you will expect high resistance liquidity run. If they're opposite direction, you will get very immediate reaction. Okay, you just take an entry, you will see every level is respecting, order block respecting, market is going to give you the breakaway gap, something like that. Very immediate reaction, you will get that. That is why you need the dollar index higher time frame. Okay, you just need an idea where market is going. You don't need very precise price action from dollar index if you are trading indices market. If you are Forex trader, man, this is the gem. Okay, just try to understand dollar is going, you will get the opposite run to that other pairs. Not always, but 99% of the time. I guess from daily chart you get an idea. Now you can see this is the run from yesterday, I mean the Friday run. Market is here. This is the water block. See, this is the opening of the water block from daily chart. This is the week high of the water block. I would love to see market will open somewhere here, okay, below the market. So it will open here somewhere, then it will trade around that area. Either this one, I don't want to see this one. I'll just keep it for further information, but I actually don't keep it on my chart as well. But this is the opening of the water block. I'm just talking about this opening, okay? This is the opening. This this is the opening. So if market would love to go lower, I will expect market will reach until this water block level. Then it will expand higher toward that buy side liquidity. Now it can easily go higher and it can take the buy side liquidity before even going lower. It can happen as well, but I don't want to see that. Why the calendar, Forex calendar? I mean the calendar is important. Now I have an idea. In Sunday we have a news, Fed Chair Powell. In Monday we have another news, PMI. By using those news, market can expand lower, okay? At the same time, you can see a very big fair value gap from hourly chart. So it can trade here, maybe until the constant encroachment of this fair value gap, 50% of this fair value gap, it can trade until that, okay, by using those news. After that, it will start to go higher and take that buy side liquidity. That is my expectation. I would love to see that. What if I see market open here somewhere, okay, above the market in Sunday? It opened here and then directly take that buy side liquidity. If it has taken that buy side liquidity, I will see how it trade that weekly fair value gap. Remember, this is the weekly fair value gap, and the monthly inversion fair value gap actually start from here above the constant encroachment until here. So somewhere here. I will I would love to see how it reacts to that weekly fair value gap. Is it actually going through that, or does it want to go lower? I will just take my decision depending on that, but that will be maybe little scalp. But if you want the bias, I want to see it will go lower first, then it will expand higher. That is my expectation from dollar index. I'm not going to 15-minute chart. I'm just glad to here. Okay, so this is NASDAQ, and you guys, I mean the last week or maybe before the last week, I was confused about the set. Okay, I was thinking why, I mean I didn't really know what set is. If you just close, I mean open the set, you will see there is a little differences between the price. See, some little difference, okay. Now I am not going to use set. The reason is, if I use the set, I get so many volume balance that is fake. So I'm not gonna use the set for me, okay. I'm not telling you to do that. If you are comfortable with set open, please open it, and if you don't comfortable, then just leave it, okay. But if I use the set, I get confused, okay, because there's some fake volume balance, and that makes me confused. So I'm not gonna use the set. You can see this is the all-time high, okay. I'm gonna mark the all-time high. This is the monthly chart for the Nasdaq, and this is the all-time high. So this is the last week candle. Before the last week, that was the high, and that is all-time high, okay. Market is around that area. What should be your expectation? What should be your expectation? This high and that high, they are now relatively equal highs. See how clean those highs, very clean. What should be your expectation? My expectation is it will take that high one more time. I want to see that. I want to say it will take that high one more time, then it will expand lower. That is my expectation right now from monthly chart. Now I have nothing to say about the monthly chart, but because you can see a very little small price action, and I don't need the NQ1 or the continuous I mean contract, because market is already all-time high. If market went above that high, started to go higher, I will keep taking buy entry because nobody knows how long market will reach, from where it will reverse. Nobody knows that. In that case, we have nothing to do. Either we have to sit without doing anything, or we have to take the buy. Only the buy. Buy sit up, take buy. Buy sit up, take buy. We have nothing to do. But if it take that high, then it started to go low. Then we have lot of levels. Lot of levels. See this candle low, that candle high. There is a small parallel gap. That could be our target. This candle low, sorry, this candle low, that candle high. There is another parallel gap around that area. That could be our target from monthly chart. Here I'm just talking about these two parallel gap. Okay, here and here. Then I have this candles consequent encroachment here to here. The consequent encroachment of that week. I have so many levels for the sell, but for the buy I have nothing. So I want to see market will take that buy side liquidity. Yeah, obviously it can left that like that way. It depends on dollar index. If you see dollar index is actually going lower to trade that water block level. Remember I just marked the water block from the daily chart. If you see market is actually going to trade that water block level, then there is much more possibility market will take that buy side liquidity. After trading the dollar, the water block level, if it started to go high toward that buy side liquidity from the daily chart, then you will expect market will go low toward that first parallel. This is the parallel gap. That should be my expectation. That is right now I'm thinking like this is the way market should work. I have no idea because market is around a level where it is very risky to determine the bias. Does it want to go higher? Does it want to go lower? Nobody knows that. Now you can say, brother, we are just wasting our time. Yeah, but sometimes market do something like that. We have nothing to do. Okay, guys, can you hear me? I mean, I guess I have very bad internet today, but I need to know that you can hear me or not. Okay, yes. It should be okay because the internet is full. Don't forget. Oh, Stephen, how are you, brother? No audio, no video. Oh man, oh man, oh man. Can you hear me? I mean, if you can hear me, just let me know that. I hear you. Everything's perfect. Okay, 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 okay. So you guys can hear me. Okay, then that's cool. I mean, sorry, man. Today I have a very bad internet. Okay, so this is the high. Right now, prices around that area. Okay, okay. Thank you, thank you, thank you, KCZF and Rovi. Thank you, brother. My expectation is price will take that buy side liquidity. Okay, that is first target. That is my first impression. I would love to see market will just take that buy side liquidity, then it will expand lower, or it will expand higher. Maybe it will expand higher, but right now I would love to see market will take that buy side liquidity by using the news from Monday or Sunday. Okay, by using that news. Now, guys, be very careful. Okay, don't take any entry before Monday PM session. Monday PM session. Okay, team stopped. It should work right now, Rahul. I mean, it should work, man. I don't know what should do. I'll just keep continue. If you can't hear me or if everything is not good, then just let me know. I will just close my streaming and I will make a video for the NASDAQ and then I will upload it to my YouTube channel. Okay. But let me know that you can hear me or not. Okay. At the same time, working now. Okay. Okay. Then it's cool, man. I would love to see it will take that buy side liquidity because this is more obvious buy side liquidity. That high and that high, they're relatively equal highs. I would love to see market will take that high. For you guys, whoever are here, trust me brother, in Monday, every single person is willing to take the entry. Every single person. Why? Because just think like that way. Okay, you have just started a prop from challenge. Now your target is $3,000, for example, $5,000. Your target is $5,000. Now in Friday you have just finished $4,500. You need to complete only 500. You just need $500 trade. Just $500 trade. You will pass the challenge, or maybe you will get an live account or something like that. Okay, what you are waiting for? Monday, Monday, Monday. When? London session, London session, London session. Why? Because you just need a very small portion of money to complete your challenge. So you are very much impatient. You are just waiting for Monday. Just let it open. I will trade it and I will just complete my challenge. Okay, this is the same thing. Okay, the guys who actually lost some money last Friday, real money. Okay, they're just waiting for Monday. They're thinking, okay, let it come, I will just mitigate my loss. Whoever missed the trade in Friday, they are waiting because they're thinking, okay, just let Monday come, we will take our trade. This is the level where market manipulation happens most of the time. That's why don't trade Monday. Monday, I mean trade Monday, but the morning session, please try to avoid that. Okay, you can do the paper trade, no problem for that. London session, you can do the paper trade as well, no problem. But don't trade with your live money. Just try to observe how it reacts in Monday London session and the AM session. This is very important, guys. If you don't, is I mean, you see, ICT also doesn't take, most of the time he doesn't take entry in Monday. He told that he doesn't like Monday to trade. Why? Because that is the level after 2 days of every people are willing to take entry to the Monday session, either London session, whoever actually trade electronic trading market, and the Wall Street people, they take entry to the AM session. So that is the level where you will get so many manipulation and the volume is very low. Every single thing will tell you don't take entry. For if you ask me, it's best to avoid Monday. But if you really would love to take an entry, please wait for Monday PM session. Wait until the noon, okay? Until 1 p.m. in Monday. Wait, please just write it down to your rules book and just observe the price, okay? Try to do it, man. Everyone else look forward to the weekends. Only traders are excited for Monday. Yeah, absolutely, absolutely, brother. So please, this is important. Don't forget this. Try to avoid Monday. If you really would love to take an entry, wait until the PM session. See that high, that high. They are my relatively equal highs. What price has done is extremely bullish. See, from here to here, all-time high. It is extremely bullish until here. Only one bear candle, just one bear candle. Every single candle is bull candle. I'm not thinking I'm going lower. No, I'm not thinking like that way. I'm not also thinking it will go more high. I'm at the level where I will just wait. At the same time, we will do scalping from 1 minute chart, from 15-minute chart. But for bias, I'm not holding any bias. No bias I'm holding. In a short term, you can see the buy side liquidity that high and that high, they're relatively equal highs. Oh man, I guess. Oh, oh, today's network is very disturbing. I mean, sorry guys, for this problem, I'm extremely sorry. Okay. So remember the buy side. I guess market will take that buy side liquidity. Then we will see if it would love to go higher or if it would love to go lower. We will see that after that. After that, okay. Now, if you guess think that dollar is going higher, so it should go lower. Don't think like that way. Okay. This is not for sure whoever trade the indices market, but if you are a forex trader, you can go for the sell. If you see the dollar is going higher, you can go for the dollar, pair go lower. But for indices market, don't expect dollar is going higher, so I am going to get lower run. No, don't expect like that way. Now this is the daily chart, and you can see from daily chart, this high and that high, they're relatively equal highs. I have very nice buy side liquidity around that area. That is my buy side liquidity. How do I know that when market will go higher? From here, I would love to see market will directly go high. Okay, it doesn't need to retrace. I don't want to see the retracement. I want to see it will open somewhere above the market. Okay, just let me mark this one. I would love to see. Okay, price will open above this level in Sunday. It will open somewhere here above this close. It will open above here. It will take the buy side liquidity. After that, I would love to see if there is any sign that market would love to go low. Then I will participate in the market. Otherwise, I will wait. If I see a very big run above the buy side liquidity, not the Mickey Mouse move, okay, not this type of move, a very candle like this candle. Look at this candle. If I see that type of candle above those buy side liquidity, then I will start to think, okay, just take buy, take buy, take buy. That's kind of gambling. I agree with that. That's kind of gambling. But above this high, all-time high, we simply expect market is actually going to the star. It's going to the moon. So we have to anticipate like that way. Until we are wrong, we should take long. Until we are wrong. Right now, I have nothing to talk. Nothing to say. From hourly chart, you can see this is the hourly chart. And from hourly chart, I have this very clean buy side liquidity around this area. So many buy side liquidity. Okay, no sell side liquidity left. See, no sell side liquidity left around that area. Nothing left around that area. Only I have the buy side liquidity. Market should expand higher. It should take that buy side liquidity. After that, we should expect some kind of lower run. If it doesn't take the buy side liquidity, it started to go low. What will I think? How do I know that market is going lower? Am I going to participate in the trade? No, I'm not doing that, because there is no reason market will keep that like that way until this low is broken. Until this low is broken, I'm not going to anticipate any kind of short entry. No short entry for me until this low is broken. What do I mean by broken? Guys, don't be confused. Okay, broken means I want to see a big run, a body close below that low. That that can't be the fake breakout. Okay, just think like that way. Market came here, closed there. The very next candle come back again into the range. Okay, this low and that high into this range. The very next candle closed there. So that is the fake breakout in my opinion. All I want to see, market will close here, then it will stay below that low, and then it will keep continue go, it will go lower. After breaking this low, I am expecting lower run. Before that, I am not going to anticipate any short entry. Why? Look at this low, high. So many buy side liquidity, man. How many buy side liquidity? You have no idea how many buy side liquidity we over here. Every single person sold over there. Whoever took their buy, whoever thinking that market will go all time high, they were thinking like, here, this is the all time high. Okay, it came here. So many people took the buy. So many people. Why? Because market is going to the moon. Market failed to go above that high, went lower. Again they took buy, came here, went lower. Now nobody took buy. Okay, it market came here, they started to see this is resistance zone, so market is not going to break that all time high. They, they take sell. What market has done? It went lower. This low didn't take. Okay, this low, that is the target for the retail trader. It didn't take that low, not even this swing low as well. It went lower. So many people took sell, so market went higher above those. Whoever took the sell around that area, their stop loss above here, they all are stopped out. Now lot of people take their buy around that area. Why? After seeing this big run, see this run, very big run. They started to think, okay, market is going to the moon again. They take buy. A lot of people got stopped out there. Also, some people took the buy. Okay, how do they know that when market is going to, I mean, to the moon? Okay, I mean, if anybody take buy here, where should be their target? This low, that high. Standard deviation -1. See, -1. This is the same range from here to here. The distance between here to here and here to here. This is the range. So whoever take their buy, that is their position. That is their sell limit. They will sell the market over there. All I want to see, every single person who take the buy here, whoever take the buy here, when market will go above that high, they will start to think market is going to the star. Market will expand little higher, then will break very strongly lower. Market structure shift, it will expand lower. That is my expectation depending on every single thing right now on the market. Because people are again, whoever was wrong around that area, they again start to think, okay, we are wrong. Actually, market is not going lower, it is going higher. That is the retracement. So market came here to retrace. They mark maybe this is the uh, support zone, this low, that low, this is zone. So they mark this as a support zone. They are thinking that market is going to the star. Market will do, it will go above that high. Okay, when it will break that high, you will think, just simply think, okay, it breaks the all-time high. So what should be the next expectation? It should expand higher. It will give one more higher run, then it will break dramatically lower. That is my expectation. If it happens, I will be in the market when market will go below that high, all-time high. Okay, when market will go below that high, I'll be interested to take participation to this market. Okay, it will come here, it will come back again to top that, it will go above one more time, then boom, there will be some kind of fair value gap. Price will trade that fair value gap, boom, trade fair value gap, boom, something like that. That it should happen like this. Now, I'm not telling man it is going to happen. That is my expectation. I don't know what is going to happen. Now, from here, 15-minute chart. This is the 15-minute last parallel gap. Here, this is the all-time high. There is the last parallel gap from 15-minute chart. As I told you, guys, always just mark the 15-minute last parallel gap. So this is the last parallel gap. That candle low and that candle high. Okay. Now, where price came? It came to this last parallel gap. Very important, guys. Now, I was wrong actually. I was watching Top Step TV, and at that around that time I was expecting buy. Okay, I took two to buy around that area. I got stopped out 2 times. It's true. Okay, it was paper trade, so I didn't actually lose anything, but I just forget my rules. I just forget it. Okay, I didn't care about the last paragraph. I was just watching the market like that way. Just let me show you. So price was there. I don't know. You can hear me or not. This is the bullshit ever. The internet, man. Oh, okay, whatever. I'm sorry, man. I have no idea what to say, what to do. Okay, around that area, I took to buy. I got 2 times stopped out. Why I took buy? Just let me explain that on as well. I saw this low and that low. See this low and this low, they are relatively equal lows or the exact low. So market has taken this equal lows. See, it has traded that equal lows. It expand higher. I mark this as my market structure shift. That high, that was my market structure shift. Okay, it came to this first fair value gap. I marked this breakaway gap. I was expecting it is going to take that buy side liquidity. Okay, what is that buy side liquidity? The all-time high. Okay, just a high, not the relatively equal highs. I don't go with the single high. But yesterday, I mean the Friday, I went for that one. I got confused, to be honest, guys. I was just listening to the top step, and most of the people were just saying that market is going to all-time high. So I was just anticipating market is actually going all-time high. I took one buy around that area. I got stopped out there. When market come here one more time, I took another buy to that parallel gap. Look over here. There was another buy around that area. I mean, sorry, parallel gap. So I took another buy to that candle, and I got stopped out again, and market broke, boom, something like this. Now, what I did wrong, I actually didn't concentrate of the last parallel gap. This is the last parallel gap. Remember from the 15-minute chart, just before the all-time high. So this last parallel gap, just look at the candle from 1 minute chart. How beautifully it was holding the price. I didn't I didn't give a shit about that. Okay, I was just gambling. I was just listening others. I didn't even depend on my analysis. I didn't do anything. I know I'm a human being. I do mistake. Everyone do mistake. So that was my mistake. And later, actually, I find out what was my mistake. My mistake was I was just doubting my thinking. Okay, my analysis. I was just doubting. I was thinking, okay, maybe market is actually making so many buy side liquidity. It is going to take that buy side liquidity and it is going to take all-time high. After seeing this big run, see how beautiful the run was from here to here. That was the retracement. Market went higher, retracement, higher, retracement, higher. Now this should be the retracement, higher again, and it is going to take that all-time high. What I told you about the last parallel gap. If you ever see market is holding, the last parallel gap is holding the price. It is telling you that no, I'm not going to break. I'm not letting price go higher. It is holding the price. I don't care about how beautiful the buy side liquidity is. Market is never going to take that buy side liquidity. Instead of that, it is going lower. I didn't believe myself. Okay. Last time I failed to believe myself, and I was just forcing market to give me a buy setup. So I was forcing market, I was forcing to give me a setup. I took one buy there, I took a loss, I took another loss around that area, and then market went lower. Now if I just simply thought like that way, that okay, market is holding this last fair value gap, 50-minute fair value gap is actually holding the price. So market, when the last fair value gap is holding the price, there is no chance to take that high. There's no chance. I have so many sell side liquidity below here from 15-minute chart or 1 minute chart. I guess here and some here around that area. I think around that area. Okay, so here there was some liquidity as well. So I have some liquidity here. Then I wouldn't take. I mean, I wouldn't got stopped out 2 times. I would look for, if I would look for a sell setup, then I can say market came here, it has taken the buy side liquidity, market structure shift, I could take an entry around that area. So the same concept I actually always talk about. I could take an entry over there, that could be a very big run, near about 44 handle. But I didn't believe myself, I got punished. That's why I told you that please guys, just look how beautifully the last parallel gap always works. Now if you ask me about this run, where did it came, you can ask me where did it came. Okay, see this leg from here to here. I'm gonna mark the last parallel gap from that leg from 1 minute chart. This, that. It came here. Just directly came here at 4. Perfectly the last parallel gap. But brother, it didn't stop there. It went lower. Yeah, I agree. It just came here. Where did it came exactly then? Why it didn't stop over there? Go to your 15-minute parallel gap. Look at this run. Where is your parallel gap? From 15-minute chart. Why this one? You always talk about the last parallel gap. What is this? Just look. Market has taken the liquidity. Market structure shift. This is the first parallel gap for entry. This is the breakaway gap. So this breakaway gap, market came to the entry gap. Everything is fractal, man. I mean, sometimes I also do mistake. It happens. It happens. Whatever. Guys, right now I'm thinking this buy side liquidity is more obvious for me, and I have some sell side liquidity around that area. See this low and that low, they are relatively equal lows. That could be next target, not right now. I would love to see market will take that buy side liquidity first. Then I will decide. If I see market went lower, dramatically it fall, I'll be interested to take sell. But right now I have no bias holding for the Nasdaq. And I'm not going to continue this one because of the internet. I'm very sorry guys for wasting your time, man. I have no idea how can I fix this for today, okay? Because the internet is very disturbing for today. Please tell me if you have any question, okay? Just tell me that. Let me know if you have any question or not. At the same time, please, I shouldn't ask for the like today because the internet is not working perfectly. I'm not going to ask like from you guys. I'm extremely sorry for the inconvenience or the problem. If you have any question, please let me know that. Whether this week on us, there has been big movement after 4 p.m. US, which is not normal. Any idea? Ravi, good question, brother. I actually would love to talk about that one, but I actually forgot about that. Okay, at the last hour, okay, there is sometimes actually, sometimes, not always, sometimes. If you see from 2 p.m. until 4 p.m., if you see this type of consolidation, okay, just look the consolidation from 2 p.m. to 4 p.m. Where is 2 p.m.? I guess here, here. This is the 2 p.m. So from here to the last hour, see the consolidation. If you see this type of consolidation from 2 p.m., you will expect we will get a big run or volatility around 4. Okay, just leave it. Come Thursday. So here is Thursday. This is Thursday. Okay, so I'm going to 2 p.m. So here is 2 p.m. There is your 2 p.m. From 2 p.m. look at the consolidation. This is a 1 minute chart. Okay, so this is the consolidation. Very seek and destroy mode or something like that. After 4, boom. If I can go to the very next day or the Wednesday. Okay, this is the Wednesday. So at Wednesday, where is 2? There is 2, okay? Here is it 2. See, this is consolidation or this is the extension. See the run, this is not consolidation. From 2. Now I am going to 4 p.m. This is 4 p.m. See the reaction from 4 p.m. So if you see from 2 p.m. to 4 p.m., that is a consolidation or range bound move, you will expect around 4 p.m. you are going to get a big volatility. And trust me, brother, this is the highest risky area to trade. The last 4 p.m. closing bell. Okay, so try to avoid the run around 4 p.m. But that is the way you can determine that we are going to get a big run around 4 p.m. If you see the consolidation. I guess you got your answer, brother. Rahul, bro, it's good. Thank you, Rahul. Thanks, man. No question. And your stream is working well, just not 100% absolutely perfect. Okay, KCZ, thanks for that. And my actually the internet you can see. Okay, it's now okay. 6,642 kilobyte per second. But now it's okay, okay. But I don't know. Sometimes it happens. I'm from a very developing country, okay. So it happens actually sometimes. Ah, okay. Thank you, brother. Appreciate it. No problem, Ravi. No need to thank me, man. I am just here as your brother. So you guys need to ask me the question. I will try to give you the answer. That's my job, but that's my duty as I promised you that I will give you everything. Okay, just I forget sometime to talk about something. You just need to ask me. Like the expansion, you asked me the question. I thought that I will talk about that, but then I forgot. So when you asked me, I just explain it. and I tried so many things. I was trying to give you I mean some other things as well, but when the internet is not working, I don't think so it's good to talk about that. And guys, I will be busy this month actually, so I guess after my sister's marriage ceremony, I'll be free again. And this is a life, so I'm sorry, okay? I'm sorry, but I will be online in Twitter. I will keep posting. If I see anything good, I'll keep posting, okay? I guess it will help you a little bit. If anybody is new, just ignore the problem and just give me a subscriber. Okay. I'm not asking like today. You can see I'm not asking any like, any thumbs up, but it's okay. Guys, one more thing, okay? I just would love to talk about one more thing is, how do you know that market is going to slow? Always keep open your 15-minute chart, always. And if you ever see a candle which has a big wick below the candle and a big wick above the candle, if you ever see it happen, just be careful, and just be careful from there. If you get my point or not, just let me explain one more thing, one more time actually. So here, this is the 15, I mean on my right, this is the 1 minute chart, on my left this is the 15-minute chart. Now look, price went lower, everything is perfect, everything is perfect. This is the first time, this is the first time when I get a very big wick above the market, below the market. When I see this happen, I'm already be careful about the sick and destroy mode or the sloppiness. Now this is that price action, okay? This term, look at this term, this is that term on my right, this is that term. Then when it happened, this is the sloppiness. Finally market went lower, it take that low, it went higher, so I got this candle. What does it mean? That means it's done already, the sloppiness already done. I don't need to think about that anymore. Then you will look for an entry, okay? Market went lower again, take some liquidity, maybe there is a market structure shift, you take your entry, just go for that if you have anything, okay? Look over here, this candle, okay? I'm just now talking about this candle. This candle has a wick above that body, below that body. Now here I will come to this 1 minute chart here, okay? Just look around there, okay? Here, so here, this is the price action from that specific candle. Look how price is sloppy again. This is the sloppy price action, okay? You can say market went lower to higher, brother. Why it is sloppy then? Trust me, brother, if you are on the trade and you are already take your entry, you are on the trade, trust me, man, your pressure will be so high after seeing all of this candle. So be careful if you ever see 15-minute long wick above the body, below the body. Get ready for the sloppiness. When you will think that no, market has done its job already, when you will see this type of candle, it's done already, okay? So over here, this candle, okay? This candle is here. It went above. Now you will look for an entry around that area. If you have a buy side liquid or clean buy side liquid, something, you will look for an entry. Market went lower, take some liquidity, market structure shift, go for that trade. I'm just giving you the example. How do you be careful before, I mean, beforehand? How do you know that it is going to be sloppy? This is the way you will understand that market is going to be sloppy. I guess you will get it if you see the market clearly. Now I just give you an example here, so don't say brother after this if I take that entry that will be a loss. Okay, that is different price action. I just gave you an example, okay? Mayank, seeing Twitter inbox, please. Mayank, I will see, brother. Dude, is my comments are visible to you or you are ignoring? No, man, Mayank, I'm not ignoring you, brother. I just read your message, but I didn't repeat it, okay? But I saw your message beforehand. I will check it. No problem, man. I'll check it. I just little busy, okay? So I had no idea to come in front of my chart, but I my one of two friend actually. give me the message for the weekly analysis. So I thought, okay, let's go for the weekly analysis and clear the concept for those, okay, who are interested. That's why I just come, okay. But trust me, brother, I'm really so busy, so I don't ignore it. Man, can you please tell me the time frame? 1 minute time frame, okay. So from 1st February 10 a.m. 1st February. Oh man, the internet, man. Okay, but let me try. Okay, if it loads, I'll just see. Okay, I'll see the price action on that area. I'm not sure it's going to work or not. So how do you analyze new to opening gap? I saw all your chart. Thanks. New to opening gap, brother. This is the closing, closing from. I'll just tell you, okay, brother. Just let me find it first. I mean, the question he asked me. Let me find it first, then I will tell you. Okay, just let me show you the new to opening gap. See, this candle close from Thursday, 1st February, 4:59 p.m. The close 4:59 p.m. and 6 after 1 hour 6 p.m. open. This is the new day opening gap. You have to keep it for 7 days. In 7 days, you will see lot of reaction from the new day opening gap. Lot of reaction. You will get so many precise price action from the new day opening gap. For it is used for 7 days. Okay, so this is the way I use the new day opening gap. And the high and low, they're very strong support resistance, whatever you love to mark or say, but it's very important. The new day opening gap is one of the most important thing. So Mayank, I guess this is the chart, and you told that 10 a.m. So here, let me actually use the replay mode. Invalid symbol. Are you kidding me? Man, my internet is disgusting for today. Okay, Mayank. Any time frame with you can go any time frame, and 15 minute daily or 1 minute. I love to market from 1 minute chart. Okay, I love to market from 1 minute chart, but you can go any time frame. And I love to observe the new day opening gap by 15 minute chart. For marking, I use 1 minute chart, and for using it, I use 15 minute chart. Actually, forget. Okay, Mank. I forget what was the price action around that area. Okay. So this is the price action around that area. This was the new day opening gap. Okay, remove this. But this week, first time took same a few same entries as you, but I came out early. Nervousness and making stupid mistakes, not following our rules. So it will happen, brother. No worries, it will happen, man. But slowly, we all will learn. We all will learn to be patient, to be confident. Okay, but it will take time. Okay, brother. Are you going to do on live tomorrow? Joy, I have no idea, but there's low probability. Okay, I don't think so that I'm gonna come live. Okay, I guess I'm not going to come live this month. I have no chance, not even for my own trade. Okay, Mayank, as you asked me, brother, this is the fair value gap. Okay, from 15-minute chart right now over here. This is the fair value gap. This is the new day opening gap. Now, the question, Jai, you asked me how do I use the new day opening gap? I guess it is going to be helpful for you as well. So this is the new day opening gap. Price came here. This new day opening gap, it went higher. Where did it came? To this fair value gap from 15-minute chart. Let me actually mark it by box. That will be easier to see. So this is the 15-minute fair value gap. So price came here. It has taken all the buy side liquidity. Now I have this sell side liquidity. Okay, I have this sell side liquidity. I don't have any buy side liquidity, and I will just go to 1 minute chart. Just keep in mind, I have sell side liquidity. I am interested to take sell. I am not interested to take buy. Price came to this 15-minute fair value gap. I am interested to take sell, not buy. When I will be interested to take buy, if I see this fair value gap is broken. If it is broken, then I am going to take buy toward that buy side liquidity. That high has taken by that run. Now this is a shallow run. This is more confirmed buy side liquidity. This is kind of obvious buy side liquidity. Always, as always, I told, okay, if you ever see the shallow run, that's gonna be your obvious buy side liquidity. Now, if you see there is relatively equal lows, then one high try to come, I mean, break that liquidity, then failed, it went lower. That will make that buy side liquidity more stronger. But if you see the shallow run, this is more obvious liquidity. That means market is going here or there, I don't know, but it is going to take that liquidity. When I will think that market is going to take that buy side liquidity, this high, okay, I mean, let me mark it, this high and that high, okay, this high, these two highs. Now this is my buy side liquidity level here, because this is the shallow run. This is shallow run. If this fair value gap, look at this run from 15-minute chart, this is only fair value gap. If it failed to hold the price, that means it's broken. Then this buy side liquidity will be my target. Am I going to hold my trade until there? No, never. I will just hold it until maybe new day opening gap low, or maybe consequent enforcement, or maybe from 1 minute chart any other level. Man, this is for you, okay? Right now, I'm seeing that, yeah, it is hindsight. I mean, I already know what happened, but I'm telling you the way I think. Okay, this is the way I think. Now, I don't know why you get stopped out or you get swept, but I will just tell you the theme. Until here, until that run, I had no interest to take buy or sell. Why? The first reason was I had no sell side liquidity. I have buy side liquidity, but price was inside this fair value gap from 15 minutes. So I don't have any buy opportunity because I have buy side liquidity, but this is holding the price. But I have no selling opportunity because I had no sell side liquidity. Now this low and that low has made relatively equal lows. Now I have very clean sell side liquidity, and I'm seeing price has taken all of this buy side liquidity. That means market has taken the buy side liquidity, it has left the sell side liquidity. The last 15-minute fair value gap is holding the price. I'm interested to take sell. Now I'm in 1 minute chart. So this is that run, okay? It has taken the buy side liquidity. All I need a market structure shift with immediate reaction. I will go step by step. I know it's hindsight, but I will just tell you the way I think, okay? So it is going lower. I mean, look how it is trading around that area. Until now, I didn't get anything. No, this is not displacement, and if even if it is displacement, there is no market structure shift. No market structure shift. Now, I saw a lot of people take their sell around that area. Okay, to this fair value gap, a lot of people take their sell around that area, and they have posted to their Twitter or somewhere. Then it fall very nice way. It fall. I am not interested to take sell around that area. Why? Because I don't have any market structure shift. I am going to miss that entry. I'm okay with that. I am not interested to break my rule. If you would love to take buy, there is no option to take buy. Why? The reason is you have no buy side liquidity. You have only sell side liquidity. So you can take your sell only. Until this fair value gap is holding your price, you have the opportunity to take sell. You are not allowed to take any entry before 9:30. So where is 9:30? Here. There is your 9:30. You are not allowed to take entry before 9:30. From 9:30, you will start to look for an opportunity to take buy or sell. So before 9:30, I mean around 9:30, see this low came later to make this sell side liquidity. It came later, but here until at 9:30 or around that area, you have no sell side liquidity. You have buy side liquidity from here. This is the buy side liquidity, but the 15-minute last fair value gap is holding the price. So you are not sure that market is going higher or lower. You can take buy around that area. You are allowed to take your buy when this fair value gap is broken. And market went lower little bit. It has made relatively equal lows one more time. Most importantly, I remember this area. I'll just show you. I was just thinking that, okay, I'll just let me show it to you. Okay, look here. I'll just tweet it, okay, beforehand. Now here is your liquid. Okay, before here, this was the first tweet from February. I'm holding no bias for now. Price is in indecision mode, no buy side, no sell side. See, Mayank, as I told you, no buy side, no sell side. Let market make some liquidity for us first. Good morning, guys. So that was my first tweet. Then I came. If I can show you the time, I don't know how to. Can I show you the time? Okay, here, 9:20 p.m. I mean, it is my time actually. You can see on my to the down. I have the time, or I don't know. You can see it or not. So in Bangladesh, BD 9:20 means in uh, in America it's 10:20 a.m. That means 9:20 p.m. is equal 10:20 a.m. So where is your 10:20 a.m.? Here is your 10:20 a.m. Here, here. Okay. And one more thing actually. Just a second. I don't know. I never do this, but let me try if I can. I don't know it will work or not. I don't know how actually they put. I mean, they copy the tweet and they paste it. It will be easier. I mean, I never tried it. Okay, whatever. It's 10:20 here. I have tweeted here right there. Now here is the liquidity level. Buy side 17,36375. 17,36375. 17,36375. Let me mark that. 17,36375. Okay. So that was the buy side level. Okay, that was the buy side level. 17,363.75. I have tweeted when price was around that area. Prices around that area. And sell side 17,26275. 17,26275. 17,26275. See the sell side. There is your sell side. So I have tweeted when price was around that area. Before this tweet, I told that I'm holding no bias because I have no sell side liquidity, no buy side liquidity. Around that area, I have tweeted I have this buy side liquidity, I have those that sell side liquidity. So what is my expectation? Market will come here, it will take that buy side liquidity. The last 15-minute parabolic gap will hold the price. I'll get a setup around that area. This will be my target. That means if I just get a market structure shift around that area, that is my entry. Just for example, that should be my entry here. So it's near about 82 handle. Okay, and buy side then sell side missed for one handle. Did you get it? Okay, I have tweeted. See this is that run here to my Twitter. Now Mayank, this is your question. I really don't know where did you take your entry, because I didn't see your entry around that area. But the reason is you can't take your entry before 9:30 and until this level, until here, until that candle, I didn't see any buy side liquidity, and I saw the sell side liquidity, but I didn't see any buy side liquidity, so I wasn't sure where market is actually going to do, what market is going to do. When I see it has made this relatively equal highs, and at the same time this high has made the relatively equal highs more stronger, I got sure market is going to take that buy side liquidity and then this sell side liquidity will be the target. Now it actually failed to take that sell side liquidity for one handle, but it has traded the new day opening gap. I don't need to hold it until there. I'll be happy with that last parallel gap, hold my trade. Okay, from there if I get and set up around that area. Now I didn't get a setup here. I didn't get a setup. Okay, I agree with you. I didn't get a setup around that area. You can see, I mean, this one, that is the same level. Okay, I guess. Uh, it's the same one. No, this is not same one. I guess this another. Okay, over there I didn't get any setup. I so far I remember, but here I got the market structure shift around that area. That was my market structure shift. This was my fair value gap. This candle never trade that fair value gap as well. So I had nothing to do. I was just watching the price is falling. Even I knew that market is doing that. I had nothing to do. That is the precision, that is the expectation, and that is the working with the expectation, not by the price action. কিসে কিসে দরজা খোলা আছে যাও দরজা খোলা যাও so Mayank, I have I guess guy brother you have already got your answer. কিসে guys, that's all for today. Okay, I don't think so I have anything else to tell you guys. If you have any questions, just let me know that. I'm just going to open my door. Okay, then I'll come back and I'll just close the session. At the same time, if you have any question, please write it down. I will answer you and then I will close my session. Otherwise, just let me know that you have no question. 2 weeks now, same narrative matches as well. Definitely learning, but not anywhere near earning for our challenge. Hopefully soon come. Ravi, don't force, okay? Don't rush. It will come automatically, and when you will get it, trust me, brother. No one is going to hold you, or no one is is actually stopping you. But if you rush, you will be lost. As I told when I started my stream today, I saw so many people. They will come here. They will try, give a try. Okay, let's see if it works or not, because this is the most liquidate market. So let's earn some money. then they will lose some money, they will just go away. Whoever will stay here until the end, he will be the successful man. Trust me, man, there is no other option. And this is the most easiest industry to earn money. The most easiest industry. You just need to spend maybe 3 to 4 hours a day in front of your setup, of your laptop, of your maybe setup or whatever you have. You have to just spend sometimes 3, 4, 5 hours. That's enough. One trade, maximum two trade, close your chart. Earn as much money as you want, but it will take time. Be careful. Always be careful. Never be greedy. Never break your rules. Like here, I break my rules. That was paper trade, man. So I'm not actually. That was. I mean, that is paper trade. So I really didn't. It didn't hurt me, but I got my lesson. I didn't listen my analysis. I was just listening others, thinking market is going to take that high, all-time high. It's going to make the all-time high. I just forget about the last parallel gap. Whatever I told you, the last parallel gap was holding the price perfectly. Still, I was forcing market to go higher, and I got punished. So please just stay tuned. Don't rush. It will happen automatically. And when it will start to happen, trust me, brother. Fun. It's fun, man. It's fun. Okay, okay, okay. See you in next stream. Okay, man. Thank you, brother. When live trading, it's full pressure cooker. It will be easier, okay? It will be easier. Don't worry, man. When you will get winning trades again and again, sometimes losing trade, and most of the time winning trade, you will be confident. You will even don't care about your trade. You will just take your entry. You will put your stop loss. You will just go away from the market. Okay, you don't even need to think about what is going on. But it's kind of pressure, obviously. It's emotional thing. But trust me, if you stay tuned on your rule, you'll be the winner. Thank you guys. Thanks for joining, and be careful this week that we need a sign that market would love to go lower or it is going to go higher. We just need a sign. When we will get a sign, we will jump for the trade. Until then, be careful. Try to do some scalp, but not I mean expecting higher run. Don't expect that. Try to do some small scalp, maybe 15 to 20 handle. That's enough, in my opinion. Be careful, okay? If we don't see you much this month, be well and just as a brother. Okay, Casey, thanks, man. Thank you, brother. Much love from here. Much love from me, okay, guys. Thank you, guys. See you. Bye bye.